Ernie here yet. Yes, it is. But should we, we're 2 minutes over.
Let's go for it, Brian.
You want to go for it?
Yep.
Okay, wonderful. Well, I am very excited to welcome everyone here and get started into our webinar, part of our Be Your Best series. We are excited for today's panelists. I'm going to hand it over to Richard, President of HGAR and One Key MLS, and let him sort of guide us through an introduction of the various panelists. And then we'll get back to some housekeeping items and really dive into the meat of today's conversation. So with that, Richard, it's all yours.
Thank you, Brian, and good afternoon, everybody, and welcome to the Be Your Best series, where we share best practices conducting business amid a challenging landscape and a changing landscape. I'm Richard Haggerty, CEO of the Hudson Gateway Association of Realtors. We're a not-for-profit trade association representing more than 13,000 real estate professionals in Manhattan, the Bronx, Westchester, Putnam, Rockland, and Orange counties. I'm also President and Chief Strategic Growth Officer of One Key MLS, a comprehensive multiple listing service for the New York region. One Key has more than 44,000 subscribers and serves the region from Montauk to Manhattan to Monticello. Today, we focus on getting the deal done in a seller's market, from the Hamptons to Manhattan, Scarsdale to the Catskills. With mortgage rates at near all-time lows and pent-up demand, will the market favor sellers through 2021 and beyond? Our experts are hopefully going to have the answers. We're pleased to partner with TitleVest and have President Brian Torme here to moderate our discussion as usual. TitleVest is a leading New York City-based title insurance agency, a member of the First American family of companies, offering a full range of services for real estate property purchase and refinance transactions. TitleVest has offices in Manhattan and Westchester and engages in transactions upstate, downstate, and nationwide. TitleVest has won the New York Law Journal's Be Your Best Title Agency Award every year since 2013. So let's meet our panel. Jennifer Grimes is a real estate broker and owner of Country House Realty, serving Sullivan and Ulster counties. Also joining us is Lisa Whitman, associate real estate broker at Brown Harris Stevens in New York City. We're pleased to have with us Laura Miller, an associate real estate broker at Houlihan Lawrence in Scarsdale. And hopefully we will be joined by Ernie Servey, of the Regional Senior Vice President of East End at Corcoran in Bridgehampton. Also joining us today to share his legal expertise of the market is Bruce Cohen. Bruce is the founding partner of Cohen and Frankel in New York City. Thank you to all the panelists for joining us today. We've certainly got the region covered. And Brian,
I am Ernie Servey. I was able to get on.
Oh, excellent. Ernie's here.
I'm here.
Excellent. Well, Richard, thank you so much for the introductions. We very much appreciate it. Thank you to you, Jeff, Gary, Kathleen, and the whole HGR team for hosting us in this ongoing series. I think it's been now a little bit over a year that we've been doing this. Started in the pandemic and still going strong. Before I turn to our housekeeping items, I do want to do a little quick shout out. As Richard mentioned, TitleVest has won the New York Law Journal's Best Title Agency Award the last 8 years, since 2013 forward. Voting has just opened up. And so we encourage all real estate professionals to take time, go vote for your favorite title agency. I happen to hope that it's TitleVest that you go vote for, but you can follow instructions here at titlevest.com/vote to get a link to the New York Law Journal's survey. So with that, let's get into a couple housekeeping items. First, questions are extremely welcome. We want this to be an engaged dialogue with you, practitioners, and our panelists. We strongly request and ask that you put your questions into the Q&A function. So for most of you on your screen, that'll be at the lower portion of your screen in a small banner, Q&A with two little chat bubbles on top of it. So click in there, enter your question, provide your name, please, as well. So we'll call and read it out on your behalf at the appropriate time in today's conversation. So we may not get to it right as you post it, but we'll still get to it probably nevertheless. Alternatively, voices are welcome. Everyone is muted for the listening pleasure of us all. But if you need to unmute, put a note in the chat and we can unmute you and you can ask your question verbally if you prefer. But otherwise, everyone's muted other than our panelists. And please feel free to use the chat for additional commentary, here's agreement, or possible commentary on what's being said in today's presentation. So before we dive into the full meat, Richard, we created this pattern and we've been sticking to it. And every month I look forward to sort of your stats and market moves update. So tell us what we're seeing out there. I have to imagine it's almost as hot as it is outside.
It is like a broken record, Brian, as we keep on talking about month after month. Just looking at some of the counties we're talking about today, looking at Suffolk County, where Ernie's office is located, in terms of transactions this May compared to last May, almost a 30% increase in number of closed transactions. And looking at the price of properties in Suffolk County, a 14.5% increase over May of last year. Shifting over to Westchester County in terms of number of sales, 37.6% increase in number of sales May this year compared to May last year. And again, don't forget, we're kind of comparing apples and oranges because May last year, things were still a little bit in the deep freeze. We still could not physically show properties. So none of this is really unexpected. Median sales price, almost a 12% increase for single family homes May this year compared to May last year. And looking at Sullivan County, where Jennifer's located, that's been the hottest market that we've had in our area, an 85% increase in number of single family transactions May this year compared to May of last year, and almost a 20% increase in median sale price. Lisa, I'm hoping that you're going to be able to fill us in on Manhattan. I looked at some Acris numbers. And it looks like it's about 11% down price-wise and about 10% down in terms of number of transactions. But I think we also know that the city is really picking up very quickly from my perspective compared to where it was a year ago. So even those numbers are a little bit down compared to the rest of the area, I still think that we're seeing a recovery in New York City and in Manhattan. So with that, Brian, back to you.
Yeah, well, thank you. Today we're going to be talking about, from Southampton and Ernie's category to Scarsdale, Laura's, all the way up to Sullivan and the Catskills with Jennifer, a seller's market and what they're seeing, the patterns, the trends, et cetera. And let's, Jennifer, I'm going to start up north. I just spent the weekend up there. It was gorgeous, glorious. The drive up there up Route 17 couldn't be better. Had a great time camping. Tell us about what you're seeing in the market upstate.
Sure. Thanks, Brian. I think it's useful to look at the macro picture of where the area is in its cycle. And so pre-pandemic, the Catskills, in particular, Sullivan County, was on this amazing trajectory of popularity. It's kind of the last of the Catskills counties that are within a 2.5 hour drive of the city to really go over the tipping point and kind of join the party. So what we found is that millennials and the folks probably just a bit older than them, just as a group, the area seems to really resonate with them. They might be a little bit more inclined to, maybe slightly less inclined than previous groups to be Hamptons beach people, and be more inclined to be mountains. And, I always say, the Brooklynites with their beards and their tattoos, gathering around the campfire with their local craft brews and some, artisanal meats on the grill behind them. That's the market that we just kill it with. And they are leapfrogging over the suburbs. They're remaining in the city, at least pre-pandemic, and they were buying like crazy up here. So I think what was happening is that the pandemic really helped our market mature much faster than it would have otherwise. But as we come out of the pandemic driven buys, we still have all of this pent up demand driven by that market looking by here. And then it's kind of on steroids, because now there's this whole other group of people who say we can still do our jobs from up there. And that might not have been on the table previously. So in terms of will this market last? I mean, I think it has a long way to run. The statistics that Richard, you were quoting there, I mean, again, it's not apples to apples, but I'm not sure what the numbers would have been between 2019 and this May, but I think we have a lot of room to run up here for sure.
That's impressive. And are you finding, as we were chatting about in the sort of green screen section, there's a lot of new venues and restaurants and things opening up as well. Like businesses are following those buyers.
Oh, and there's the buyers are driving this entrepreneurial spirit. You get a lot of people who came up here with weekend houses who have decided to move up full time and open businesses. So Memorial Weekend alone, there were 2 businesses in Roscoe. I know you were up in Roscoe recently, Brian. There were 2 that opened there. In Livingston Manor, there were a couple. I mean, it's a continual process. And I've noticed that when I post a story promoting some of these new businesses on Instagram, the number of people who click through, the engagement rate is off the charts, which means that there's this insatiable desire to kind of plug in. People come up and they're not just buying a house on 300 acres to just be isolated. They actually really enjoy the community aspects of that here. And I would say that aspect of things is somewhat recent. And when I say somewhat recent, I mean, in the last 8 years or so, there has been so much more opportunity to plug in and become engaged because there are more events and opportunities.
Yeah, that makes great sense. Well, we're going to get to the Westchester market and the Hamptons market, but to pivot a little bit to another section, come all the way from the country and the Catskills, and Laura, we're going to come to, Lisa, going to come to you. Let's chat a little bit about what we're seeing happen in Manhattan and New York City with sort of the pre-pandemic softer values and sort of what you're seeing during the pandemic and especially now as things are really starting to get going.
So basically, what we saw in New York City was a softening in our market from 2015 all the way to just before the pandemic. Really started softening looking back, 2015 was the height. There were still some really high sales in 2016, but it's definitely started softening in 2016. And hard to know exactly why, probably a lot because of the change in SALT deductions. There had been a lot of overbuilding. We had a lot of buildup of inventory. We also had Street Easy had become a tool here in New York City just around 2005, 2006, but a lot of people didn't really use it for the first 10 years. And around 2016, it started becoming a tool for everyone. And it completely changed our market and made everything very transparent. So suddenly buyers could bought their listing, their similar type of property for before, and it made buyers very conscious of sort of comparables and not paying more than a previous person had purchased something for. So obviously it's a little bit different. That's tougher in apartment sales than in houses, because houses can differentiate themselves a little bit more. It's very hard to do that with apartments. If buying in a line in one building and the line right below you or the right above you have sold in the last 3 or 4 years for specific prices, you're sort of stuck where that is. So it continued to soften until the end of 19, early 2020. It was hard. It was a lot of people felt like they were, trying to catch a falling knife, and you would lower your price. It would be too little, too late. Days on market were really building up, and there was a big frustration that sellers were feeling because it was the first time since 1987 that our real estate market did not follow the stock market. And obviously, New York City is very stock market dependent. A lot of people work on Wall Street. And it didn't even matter that the stock market was, rallying, going crazy, record highs. The prices were still soft and the market was soft. Then, of course, to add insult to injury, the pandemic hit. Just pre-pandemic, for sort of tried and true real estate, we were down about 10%. Some of the other stuff was down even more. Some of the product on sort of Billionaires Row, places that have been overbuilt, were down even 20%. But the tried and true average was down about 10%. Pandemic hit, we were shut down for a few months. When we reopened, we found ourselves at another 10% down. And if you were able to buy something last fall, you got a really good deal. That continued for a while, and there was really a feeling that New York City real estate was really in the dumps, and that there was going to be a big fleeing from Manhattan. I will say, not to say that I'm a future teller, but I did not think that that was going to happen. I worked through the 9/11 situation, and same thing happened right after 9/11. People walked through contracts, they left deposits, people left, people said cities are over, no one's going to want to take subways anymore. And that was spring of right after 9/11, we had the busiest market we had had in several years. So we're looking at the same situation a little bit here. January came, we had a new president. There was less noise about all the presidency issues, and the vaccine started rolling out, and suddenly the market started picking up. We've had a really, really busy few months since January. I would say that we have recovered that second 10% that we lost. So we're back to just pre-pandemic prices, but the head feels better now. There was a sort of a gloominess pre-pandemic, and now there's a feeling of euphoria that the pandemic is behind us. People who work in the markets have made a load of money in the last couple of years. They didn't spend anything in the last year and a half. They didn't go anyplace. So we had a lot of pent up demand. We had a lot of people who felt that they had money burning a hole in their pocket, and that they wanted to buy something. People have been in their same smaller apartments. They wanted a bigger apartment. All of those things happened. Now, I will say this, and this is a word of caution for sellers and anybody working in the New York City market. It is still very, very price sensitive. So if you put something on the market at a 2015 price, you will not even get a call. Excuse me, I'm suffering from a cough that I got as soon as I took off the mask. So if you price something at a 2012 price, you will sell it immediately. So if you overprice, no one calls. If you overprice a little, people call, but you don't get many showings. If you price well, you'll get a good bid within a month. And if you underprice, you'll have a crazy bidding war. But that's all to say that we're very, very price sensitive. And there is still no room for overpricing. And I have seen some sellers getting cocky now, both developers and resale sellers saying, oh, I've heard the market is, on fire. I think I can ask more. And I'm always very cautionary that because of Street Easy and the complete transparency, if you price your property aspirationally instead of appropriately, it will be crickets.
So then would you say that it's not a seller's market yet for New York City?
No, it's not a seller's market. I would say it's the closest to what we've ever had of it being sort of equal. If you're a qualified buyer and you're ready to pounce and you find something that's well priced, you're going to want to pounce on it, because if you don't, somebody else will. But you don't have to pounce on something that's overpriced because somebody else will. So, for instance, I just went to show an apartment that's asking $6.5 million, and there's a little bit of because the broker can hardly, everybody's sort of lining up to see it. Buyers, it's not going over ask, and I don't even want you to pay the asking for it because it's a very aspirational price. And I'll be shocked if it does get multiple bids, because again, even though they've sort of lined it up to be one of these things that should go into over ask, we are not seeing buyers overpaying right now in New York City.
Yeah. Okay. Very interesting. Well, thank you, Lisa. We appreciate the perspective on Manhattan and what you're seeing happen there. Laura, as we turn to the Westchester market, tell us sort of some of what you're seeing. And Bruce, by the way, you're welcome to chime in on any of these. You transact in all these markets. So actually, before I turn to Laura, is there anything you would want to add into what Lisa was just saying specifically on the Manhattan market? And then Laura.
Manhattan market, I don't think we've ever been busier in our life. And I'm 64 and I'm doing this a long time. And a lot of the active attorneys are working 7 days a week until 11 o'clock at night. And I think it's funny, the questions that we get from people like, do you represent buyers or sellers, or everyone's leaving New York? And we care about volume, and I think the brokers as well. If there's a seller, that means there was buyers. So it always makes me laugh. And I think one thing that hasn't been mentioned is one of the reasons I think the market has had legs and continues at least to this point to have legs, especially on the lower end, but maybe even on the higher end, is the interest rates just remain so low for such a long period of time. And I think the Billy Joel song where he says it's either sadness or euphoria. Yes, Lisa, there is euphoria right now. And when everybody was saying New York is over, I kind of felt like you're writing New York off. I think the city animal is the cockroach, because you could step on the cockroach, you could smash it with your foot, and you think it's gone. And then about a month later, it starts to move a little. And if you look at it 6 months later, it's healthy as can be. So I think, excuse me, I think the writing off of the city back then was wrong. And I think that thinking this is going to last forever is wrong. But what I would say to every broker and every attorney out there is, and buyer and seller, if you want to do something, now is the time. I can't tell you what it's going to be a month or two from now, but I can tell you what it's like right now.
Yeah.
Bruce, as somebody who lives in New York City, you've got to stop using that analogy. It may be accurate, but it doesn't create a good visual.
I know.
I'm sorry.
But don't we all affectionately look at cockroaches and they're like, yeah, that's our bug. I don't know, but I do hear you. But it's just the resilience amazes me. And the only other thing I want to add, and I say this all the time, you know, Lisa was talking about 9/11. After 9/11, I thought I was out of business. After Lehman Brothers, well, because who's going to come to New York? After Lehman Brothers, I was like, oh, I'm out of business. This is financial. This is different. You know, and now I look at the pandemic in terms of volume, not price. When something is an event, it seems like New York comes back right away. When it's something that is organic, like, for example, I think what happened in 2015, although SALT definitely didn't help, is sellers just got to, like, in their head that their apartment was worth a ridiculous amount of money just because it had gone up over and over for so long. The same thing sort of happened in 1989 and 1990. And that's when it took a long time to come back. But when it's an event, a bad event, no less, I think things come back sooner than people anticipate.
Yeah. Yeah.
I'll just add in, I don't disagree. But first of all, I've never been so happy to be called a cockroach. Thank you so much.
Not you.
But I think you're right. One of the things that happened in 2015 is that people just thought property values would continue to go up and up and up when nothing else was going up. People weren't getting paid more. Nothing, the cost of living wasn't going up. There was only one thing that kept going up. And at some point, there's going to be pushback because it was not sustainable.
Right. Right. Well, I want to turn to Laura, and then Ernie, we're going to come to you for two of the hottest markets that have got to be, you know, happening in the country. Laura, tell us about what's been happening in the Westchester market.
So the Westchester market is hot, as
To
you
say
know.
the least.
Yeah. And I know someone already talked about some of the Westchester numbers, so I'll sort of drill down a little bit to some of the areas I really cover. But in general, the Westchester pending sales are up over 90%, just as a, you know, overall area. In Scarsdale, which is my main area that I cover, it's around 80% up. And in Edgemont, it's 218% up pending sales, which is insane. The sold listings are up in Westchester around 40%, and in Scarsdale, 80% year to date, and 42% year over year. And Edgemont is around 24% year over year. So there's just a real scarcity of inventory and high demand. The median price is up in Scarsdale almost 10%, up to 1.681 million. And in Edgemont, it's up 29%, the median price up to 1.288, bless you, and which is higher than our high point, which most recently was 2017. So our numbers are above our 2017 numbers. Now our market really was highest in 2017. Our median price was quite high then. And then when the SALT changes hit at the beginning of 2018, it really drove our market down. Buyers were reluctant to jump in, didn't really know what their taxes would be with these changes in deductions. So our market went down around about 10% in 2018 and another 7% in 2019. And now we're back up 17+%. Our showings are, they were really high in the beginning of May, like 450 to 500 showings a week on just our Houlihan Lawrence listings. And now they're about 227 showings in the last week. So down from our high point at the beginning of May, but still strong. Our sweet spot in my area of Westchester is the sort of 1 to 2 million range. So about half our showings are in that range. And we are still having multiple bids. So our multiple bids, though, were in the sort of 10 to 20 bids per house at one point. And now they're more like, 5 to 8 bids. So definitely fewer buyers than we'd had, but still a seller's market and still listings at all price ranges selling significantly over asking, 100, 200 plus over asking. What else was I going to tell you? We're just continuing to see well-priced and well-presented inventory sell quickly. If you're priced to show value and you have staged, cleaned out, decluttered, all the usual stuff, your house tends to sell very, very quickly, like within a week. We'll list on a Monday or Tuesday, broker open house on Wednesday, show through the weekend, and by Monday we're taking best bids. By the end of that week, we're going into contract. Inspections done, contracts signed.
Yeah. Wow.
So it's a very quick market. Buyers really have to get out and see houses immediately if they want an opportunity to bid.
Yeah, that makes a lot of sense. Well, Ernie, I think we're going to turn to you, and I'm guessing you're seeing very similar for the Hamptons, but tell us some of both what you're seeing in terms of seller's market, as well as we're going to pivot into one of our next topics and talk about, what are the types of sellers? What are the motivations sort of leading to people choosing to sell?
Well, first, I want to just mimic what we've heard about across the other markets. Our market is up 89% over last year in the first quarter. Our average sale price has tipped to 2.7 million. And our median price is 1.6 million, which is up 50% from the previous year. So we're seeing numbers like we've never seen before and activity to match. In terms of type of sellers, I think we see some sellers that are just leaving the area and they're cashing out, going to other markets that have other opportunities, whether they be real estate wise or tax wise. And I think we're seeing, we're not seeing sellers that are trading up or down because the inventory is scarce. We've just added some inventory in the past few weeks, like about 9%, but the demand far exceeds the inventory levels. And I just think that the sellers are very realistic. If they price it appropriately, they're going to have a bidding war and sell over ask in most cases. I mean, we're just advising people, don't go in with any contingency whatsoever, including an inspection, because there's going to be someone willing to do it without. So that's how aggressive this market is.
Yeah. Well, and tell us, we got into this interesting side conversation in some of our warm-up conversation around how many deals are you seeing broken, both sort of in the early part of the deal before it's in contract and then when it's, in contract? Are you seeing parties mutually agree to contract cancellation? Is there any trepidation of like, oh wait, are we hitting too heated a frothy point in the market?
I've seen a couple, and not a whole lot, but I've seen some mutually agreed upon. Then I've seen some sellers pay cash to the buyer to get out of the deal because they've decided that where are they going?
Right.
Where do they get it? So, but yes, it's problematic because they don't have anywhere to go, and sometimes in the frenzy of all the market, you get caught up as a seller and a buyer. But as a seller, thinking, oh my God, I'm gonna get so much money for my house. This is the most I'm ever going to get, which it very well may be. But that's only good if you're not planning to stay here.
Right. Yeah, very much. Bruce, curious, are you seeing much in sort of the contract side from the council side? Are you seeing much in terms of like our deals, right? We're right, not including a lot of contingencies as Ernie spoke to in so many deals. Are those contracts just all moving through and going to closing, or are you seeing any deals that get broken over something or another? Because there's
I
traction.
am not, and I actually try to raise my hand. I don't know how to use these things, but I have to say, I'm not seeing that at all. But for the Hamptons especially, I had a deal that I'm working on now where basically we discovered that there's an open permit for the pool and there's an illegal gazebo and there all these things. And basically the purchaser, we're getting a mortgage, it's not contingent. And the seller basically said, look, it's as is, you do what you want. If not, I have someone who's all cash, who's willing to buy it this way. So not only, Ernie, I'm sure will back me up, not only is it no inspection, it's like you're buying a pig in a poke, whatever that means. I always hear that term. I don't know. I guess I know what it means by the
I
sound of
think
it.
it's appropriate here.
Like,
Yeah.
oh, Papa Roach, what are you doing to us?
I tell you, I'm very animal-like today, but I gotta tell you, it's amazing to me because it makes me feel like, as a lawyer, what am I doing here? I mean, this particular deal, I don't even have old title and survey. I have nothing. I just have a contract at a price, and they're saying you want it, fine. If you don't want it, fine. But you're buying it. You're buying what I have.
Right.
So I'm not seeing deals break at all. First of all, I want to keep them all together.
Right.
But secondly, I'm just not seeing that at all.
Yeah. Well, I think that's actually a really good pivot to our third topic, this sort of, this theme of move fast or miss out. And I think, Lisa, I think it might have been it was either yours or maybe Jennifer, your phrase, move fast or miss out. And so I want to sort of turn and say, like, you leading practitioners, what are some of your tips that can sort of help people, whether that they're on the listing side, they're trying to get a listing and then secure it, and sort of how do they, sell into that and pitch into that? Once they have the listing, how do they make sure it goes smoothly and quickly? And then especially on the buy side, how do you help that buyer successfully go into that? So Jennifer, I know you had some interesting sort of strategies that you were seeing unfold in upstate, including like, only checking into major systems and that stuff. Share with us some of your thoughts of what you were seeing happen in your market.
Yeah, the bidding process has evolved. I do a lot of, I focus more on listings, and what I try to do is to gather as much information as possible. The MLS asks a certain amount of information, but collecting all the rest of the data that buyers tend to want to know, even down to operating costs or what have you, having that all in the can before we go live, so that you have educated buyers, so that I try to have sellers, disclose issues that are known in advance. They'll come up in the inspection anyway. Why create the opportunity for surprise? So we lay a lot of groundwork prior to even going live with listings. In terms of the bidding process up here, people employ escalation clauses a lot because, we have fewer comps up here. So actually determining value is challenging. There's also not necessarily a correlation between market value and bank appraisals. So we have all of these moving parts. So our bids very frequently include coverage of appraisal shortfalls. So even if they want to finance, they will include the waiving of an appraisal shortfall down to a certain dollar amount to give the seller comfort with people taking advantage of these great mortgage rates. So that makes sense. The escalation clause is handy in a competitive environment because you can list really your top price, but it's expressed in increments over the next highest. So you're also protected in terms of not offering a crazy amount because obviously you don't know the other bids. So those are a few of the things that we use.
Yeah. Okay, excellent. Bruce, I may turn back to you. You had a whole handful of sort of tips and tricks for moving fast, so that the buy side doesn't miss out.
Okay, so houses get old title and surveys, so we know the restrictions, deed restrictions, things that can be built, can't built, have your inspectors, and if you're gonna have an architect, have them lined up ahead of time. Same thing if you're gonna, just once you have an accepted offer, expect to try to sign the contract as soon as you can. And also, I would say, I order title early. If you work with a title company a lot, they will do some spec work for you and it's worth it. But you could help them by getting title and survey. Probably the most important thing is get the finances in line. And it makes me crazy when people say, oh, my client has a pre-approval letter, especially in the Manhattan market, because a pre-approval letter means that, first of all, it means nothing. I have, this one's for you, Richard, my dog now. We're gonna go to like more, regular animals. I got my dog pre-approved for a mortgage with Wells Fargo. The point was not to waste anyone's time. It was so that I could tell clients and brokers how little pre-approval means. So in the city, for example, that might mean that the purchaser can get a mortgage, but it doesn't mean they'll lend in a particular building. So number one, if you could get comfort for your buyer that they don't need a mortgage contingency, that will give you a real heads up. And I'm sure the brokers can tell you how much more that is, how valuable that is in a bid. If they're not getting financing at all, it's even more, where maybe they could close with cash and then they refinance afterwards. And this is true of a house or in the Manhattan market. But I would just say, when a client calls me, a new client, the first thing I say is, it's important to call me, but you should be calling your banker first. Also, make sure that they're not necessarily using their private banker who may underwrite in Kansas. I would rather them go to retail in New York City than their private banker. I'm sure they have the best intentions, but it's not as good as going to, the people at Wells or the people at Citizens who do this there's lots of other banks. I don't mean to point out just the two, but what I do is I get my client on the phone with the banker and I say, I want you to look my client in the eye over the phone and tell them, are you going to be able to get them a mortgage, and under what circumstances which will you not? And it's good when you work with a team. I know we talk about brokers and lawyers or teams, but you should have house inspectors, you should have bankers, most important, you should have a really good team set up. So those are a couple of the examples. And also work fast. The best way to win a bidding war is to never get into one, to get it signed so fast that, and it's hard in New York City because you still have to do some due diligence. And I'll leave you with this one thought. There are attorneys that will say, you can't buy in a land lease building. It's such a dumb thing. Which land lease building? What does the lease say? For example, Carlton House, you don't even, the residential unit owners don't even pay the land lease. It's the retail unit owners. Well, it's the same thing with due diligence. I may not have all my due diligence, but if it's Friday afternoon, I'm going to call my client and say, this is what sorry about the ringing. Let me turn that. This is what I have and this is what I don't have. You're letting a weekend go by. It's going to be nice this weekend. You run the risk of losing the deal. Now, if it's everything, maybe they have to wait. But if and really you want to try to get a contract signed by Thursday if you get it on a Monday, because then you could at least kind of demand to get a fully executed contract by Friday. You get it to them Friday at 5, they may still show the apartment over the weekend. So those would be the top tips I could give you.
That's some great stuff. Well said. Well, I'm going to turn, we've got about 20 minutes left, and I'm going to do two things. One, Jennifer, there are two questions, one in the Q&A queue about some specific land in Sullivan County near Woodburn, that if you're game to go into the Q&A and type an answer back, I think that may be more appropriate to do there. And then there's
Okay.
actually another one about sort of some thoughts on the market in Orange County, if you want to go into the chat and give some stuff there. I want to preserve some of our airtime here because we've got some of the next part of it, which I'm very excited to hear and have you all share your prognostications of. How long is it going to be a seller's market? So if we're seeing this robust, active market, how long do we think that's going to go on? And Laura, I sort of want to turn back to you first, right? Westchester, as you said, the SALT taxes sort of created a depressive force, and now it's bounced back with crazy, spike in activity and price appreciation. The dynamics with New York City and Westchester and working remotely and crime. Tell us some of your thoughts on how long you think the seller's market runway is laying out in front of us.
Of course, it's hard to know, but
prognostication.
Yeah.
Your best perspective.
It seems to us here that there continues to be quite a large pipeline from the city. The large majority of our buyers are coming out of the city, Brooklyn, surrounding areas. I think there is, the market certainly does appear to be coming back in Manhattan. That seems to happen no matter what hits Manhattan, and I anticipate that will happen. But it may take a little longer because it's not like there was one event like the World Trade Center. This is, pervasive throughout Manhattan, businesses closing, restaurants closing, increased crime, a situation that didn't just hit one tiny area that impacted everyone, but sort of impacted all real estate citywide and people who live throughout Manhattan. So, it seems that people are moving out sooner than they used to for us. We used to get a lot of young families coming out, prior to kindergarten. So they didn't have to deal with private school admission or private school tuition. And now we see a lot of those buyers coming out earlier, feeling that they want to be out before their child is 5. And I think that part of that is, just in general, the city has been a tough place to live for the last year. But also, just due to the pandemic and the fact that people have been stuck in their apartments, both potentially, 2 parents working from home, children who maybe used to be in nursery school all day and out and about, now home all day, or even in elementary school. And so, space that used to be fabulous for a family of 4 who were out and about all day long and just home together in the evening, now all living in the same apartment in a sort of contained space 24 hours a day, 7 days a week. I think that's been pushing people out to the suburbs sooner as well. Just the space seems much harder to live in once everyone's really home all the time. And when, these apartments were purchased, I think it was with the idea that people wouldn't be home all day altogether. So the pipeline seems to be quite strong, and I think that it will continue. I think it will continue to be a seller's market for that reason.
Yeah, no, that all makes good sense. And, let's hope it does. Ernie, you had some interesting perspectives on sort of how far you thought it could go and what the inventory was looking like out in the Hamptons. Can you share with us some of your thoughts?
Yeah, I mean, of course, no one knows for sure, but all indicators suggest that we're going to go into a very strong 2022 based on the activity we're seeing now and the pent-up demand due to the lack of inventory. We do not expect to see a spike in inventory like we would normally see with our seasonality when the summer was over. People would then list their houses for sale. They're not doing that because they can't come back and even rent a house because that market's gotten really tight. But I also think as long as there's travel restrictions, like a lot of folks out here would rent their house in August and go to Europe. They're not going yet. So that's going to be at least another year. So I think that's going to have an impact on our business as well. And the other thing that, and I have to credit City Private Bank, we had a call with our partners there yesterday, and they had an interesting observation that the commercial market in which we used to be a second home resort market. Now we're a year-round market that happens to be a resort. But their prediction is that the commercial inventory is going to explode because employers have found that their employees want to work at home. They can do business really anywhere. They don't have to do it in the most expensive city in the world. So I think we're going to see some businesses moving out, which is going to create another whole influx of demand. So we're looking at all positive things for the next year or so.
Okay. Okay. Very interesting. Well, turning to New York City, Lisa, I'm sure you are well aware of, and we'll speak to the amazing amount of inventory. While some other markets have struggled with total inventory on the market, New York City, at least in terms of new dev, has got a lot. So tell us what you think that means for sort of the length of this almost seller's market, as we were sort of talking about before. What do you think New York City looks like? What does the next year or two look like for New York City?
Well, so again, I'm going to say that we don't have a seller's market. I think that for the first time in a long time, we may have what's kind of an equal market. And I don't remember the last time we had that. Maybe Bruce can. I think it's kind of a fair market for everybody right now. If you're a good buyer and you've done your lots of property, so that when you see the right one, you know what it's worth and you're ready to push on it and even pay more than that. And as a seller, you really want to be educated and listen to your broker about where you should be pricing. Because if both sides do those things, then deals are coming together, which is why Bruce is so busy. And truthfully, I've been doing this for almost 24 years, and I've had the best 4 months of my career too, because it is about transactions. So I'm going to push back on what some of the other folks in the suburbs and other places have said. We did see this flight like we saw after 9/11, but I'm seeing a flight back. Sold more apartments to empty nesters in the last 3 months than I did in the last 3 years. They were able to sell their houses in the suburbs that they weren't able to sell before. They're ready to move back into New York or come into New York for the first time, maybe semi-retired, and they want to be able to enjoy the theater. It's all coming back. You're a city mouse. You're a city mouse. And, I remember when everybody said they were moving to Palm Beach, I said this a year ago. I said, yeah, the problem is then you live in Palm Beach. So I think that I've had a lot of clients say, it was great being out in the Hamptons for a year, but I can't live there forever. And I don't want to wait in line to get into a parking lot to go grocery shopping. And, one of the nice things about New York City is the anonymity.
Yeah. And Lisa, I may
And the fact that there's so many choices of restaurants and places to go.
Yeah.
Sorry, say it again.
I was just going to say your bandwidth is cutting in and out enough that I think I may pivot for a minute. But
Okay.
I think we followed
Sorry about that.
along. No, it's okay. Technology. And I love that we've done, cockroaches and dogs, mice, just covering everything. But so, and
Hey, Brian.
Ernie, I'm happy to go live full-time in the Hamptons if you just happen to have a throwaway place. I like being a city mouse, but I wouldn't mind being, a beach mouse too. So,
Brian, we just bought a house. You're invited anytime you want.
There you go.
By the way, Brian, can I just add one thing?
go for
And I
it.
feel like I talk in cliches in these things, but this suburbs flight versus city flight, I'm going to go back to this. It is a zero-sum game. Everybody always says it's not a zero-sum game. So there's the city flight of the people that say, I got to get out of the city. And then there's the young family that never thought they could afford to buy in New York City, but with interest rates low and prices low, they're looking at their monthly nut and they're saying, oh my God, I always wanted to live in New York City. Here's my chance. So again, I so strongly believe that if there's a flight in, there's a flight out. The only time that's not true is like after 9/11 or in the midst of the pandemic. But I think as equilibrium comes to play, this is a win-win for everybody, and it is a zero-sum game. Granted, there are some renters that maybe would have bought in the city that will want to move to the suburbs or vice versa, but at the end of the day, and also there's one other thing I want to bring up about Street Easy, and this is the importance of a broker. And I try to explain this to all my clients. Sometimes they'll call, I'm selling, I'm buying, aren't I better off saving the broker's fee? I'll get a better price. Street Easy is only accurate and the transparency is only good up to a point. Because a lot of times, no offense to millennials, but they think, you know, they're the smartest people in the room, and maybe they are, but they're comparing apples to ketchup sometimes. They will compare two buildings that have no right being compared to each other. Plus, Street Easy doesn't always show some of, especially in new construction, some of the credits and
Credits.
accommodations, even though they're supposed to under the law, under ACRAS, they just don't. So that's the importance of a broker. And I try to get all my clients to use brokers, not just because I'm broker friendly and you guys send me business. In my heart, I think a client is better off using a broker. I just do.
Yeah, no, that all makes good sense. We've got a couple minutes left, and I want to turn quickly to an interesting topic that I think is, you know, influencing things. And we actually just had a question come into the Q&A along these lines. The question in the Q&A was, is there any expectation or evidence that inflation will increase home values in New York City and the suburbs? And the more precise question I want to layer on top of that is, what are we seeing in these markets as the impact of the cost and limited availability of construction materials and labor doing in your markets, right? And is that impact, which we can, I think, identify there is an impact, is that impact going to last, or is this a temporary thing? So Laura, I may turn to you first for sort of, you know, the cost of impact. You had some good examples and anecdotes for us.
Yes, so the cost of construction is way up. I think lumber is well over 100% up over last year. Bathroom fixtures, electrical materials, even permits have gone up. I have had a situation where I had a buyer looking to buy new construction, and a builder agreed to a $4 million price, which was what he was asking for the house, without any additional things that my buyer wanted done. He wouldn't agree to do anything extra at that number. And then literally the next day woke up and called me and said, I can't take my asking price. I'm going to raise the price $250,000 because all my subs are calling me, telling me that they're raising all their prices. And it is true. I mean, he has shown me the lumber bill from a similar house I sold last year for 3.9 that was just closed, and that's smaller than this house. And the lumber is more than 100% higher for the bill for this house. Then that guy went to buy a different house, and for a little under 4.5 million, and got an accepted offer. The builder spent 2 or 3 weeks talking to his subs, trying to get a spec sheet together to attach to the contract. And after 2 or 3 weeks of that, realized that his prices were going to be significantly higher. And he said, I can't sell it at this price. I need to raise the price $500,000. So, we're finding that all of these builders, especially the ones who have already signed contracts and find themselves trying to source materials, which is very difficult. Even to just get the materials at any price is very hard. I think Sub-Zero has a 6-month wait period. And to pay for the materials, which are significantly higher. And all the subcontractors are getting hit. So they're increasing their prices to these, builders. So it's been a very tough situation. And likewise, just for renovations. So the houses that are, newer, sort of, 10-year-old to 20-year-old or less, newer constructions where, they're really in nice condition and feel like a new house are selling well, due to the fact that buyers don't have the hassle of renovating or building and the delay in expense.
Yeah. Yeah. Ernie, was it you that had the story about chasing down a special stove?
Yes, I had the personal experience of trying to get a gas cooktop, and there were only 8 in the whole country. So I actually got into a bidding situation for a gas cooktop. And that's problematic. Like we just heard about Sub-Zero. You just can't get the materials no matter what you're willing to pay for. So it's slowing down. It's infecting our closings because you have to deliver especially for new construction, you have to have a stove, refrigerator, and in place. And it's not the product that people necessarily want that is available.
Yeah. So it's definitely hitting your market as well. And, and Jennifer, I know it's, especially a labor shortage up in your area. Tell us some thoughts on that.
It's just across the board for everything. Everybody's hiring. Actually, I'm from Westchester, and I'm not an expert on that market by any stretch, but my mother, who's still there, was saying that she just read something that lifeguards, this is for any of you who want to take the summer kind of off, lifeguards are going to be paid $30 an hour plus free housing. Did anybody hear that lately in Westchester? But yeah, we have a shortage for everything here. I'm sitting in a house that I was renovating that I was going to rent, but I can't get the deck put on. And so I moved in. And that's kind of par for the course. But we don't have a very robust new construction market here. There are only a handful of kind of serial developers. For the folks who want to build of custom houses, they're the ones who are kind of stuck. But really, we look mostly at people who are buying existing homes and renovating them. And everybody's just having a very difficult time. It's kind of the talk of the town.
Yeah. Yeah. And well, so I think we're nearly at time. To all our panelists, any last tips, tricks, or commentary that we didn't get to today? There was such valuable insights. Thank you for sharing it with our 100 and something people today. Tell us, in anything, feel free to sort of raise your hand. Anything that anyone wants to add into today's conversation that we didn't get to? No. Okay. Well, wonderful. Well, thank you all for being here. Richard and Gary and HGAR team, thank you again for hosting. Always excited to do these sessions, and we look forward to seeing you all next month for the next installation in the Be Your Best series. In the meantime, take advantage of all the contact information for these industry experts up on the screen. I think, as you can tell from today's panel, they're all excited and eager to connect with their customers and other practitioners in the space. So don't hesitate to reach out to them. And with that, Richard, any closing remarks from you?
Just mark down July 8th. That's going to be our next webinar. The title is going to be The New Manhattan, all the developments from Hudson Yards to Penn Station or Roosevelt Island. So mark it on your calendar.
We're excited. Thank you, everyone. Have a great day. Enjoy the heated market.
And Richard, thanks for the opportunity.
Thank you, Bruce. Really appreciate it.
Bye.
Thank you, everyone.
Thank you.
Bye-bye.
Thanks, everyone.